Welcome to Warren & Stewart's February 2014 tax update. Today we're going to talk about ISAs, or individual savings accounts. ISAs is a government scheme which allows investors to invest in stocks and shares and in some cash balances as well, which are allowed to grow in a tax-free environment. That basically means that there's no capital gains tax to pay if you make a gain on the disposal of shares, and there's no income tax liability on dividends or interest earned. So ISAs are very attractive, and if you're able to build up a portfolio of ISAs, it can be a very good vehicle to use. Each year you're given an allowance of around £11,500. Now that runs to the 5th of April each year, and if you invest into an ISA before the 5th of April, you can use your allowance. If you don't invest before the 5th of April, you lose that year completely. So if you're thinking about an ISA, now's the time to do it. Equally, if this is the first time you've ever used an ISA, you may also want to think about investing next year's allowance after the 5th of April, pretty much immediately, which can allow you to invest up to, say, £23,000 in stocks and shares. You're also allowed to invest up to around £5,500 in cash balances. Again, if you use both years, you can make that balance up to £11,000. Things to bear in mind with ISAs: if you're a US citizen, although you'll be resident here, you still need to report these gains and interest and dividend on your US tax return. If you make losses with an ISA on your stocks and shares, those losses aren't eligible for relief anywhere, because equally the gains are exempt. ISAs are a good tool to use, and if you're thinking about them, now's the time to do it. If you've got any shares that you hold in your own name, can you put those into an ISA? And I think that process will be bed and ISAing, I think is the term they look to, where you sell the shares now and transfer it all into an ISA pretty much the next day. So my name's Damien Talbot. I'm a tax director here at Warren & Stewart.